Jane Street partners shield their internal hierarchy from public view. Interns write basic algorithms before earning the right to execute million-dollar trades as senior traders. New graduates must master 6 distinct roles across the trading and systematic research desks to reach the rank of voting member. 6 traders divide $1.2 billion in annual profits, while a different employee writes the specific code generating those massive profits. That female programmer sits in an unphotographed hallway 3 floors below the main trading desk, and she has worked at that exact desk for 18 years. The firm puts her name on 0 official legal filings, yet the firm uses her complex mathematical pricing models to execute every single financial trade. You start your very first day as her colleague at 8:30 in the morning and you click submit on $1 million quote. Your coworkers ignore the action. They offer 0 nods, they give 0 glances, they make 0 spoken comments. You learn the main office rule at that exact moment. Jane Street ignores perfect trading accuracy. Managers notice mistakes. They ignore flawless work. You will hear the steady air conditioning hum louder than any compliment all year. Jane Street pays you more money during your first summer internship than your college friends earned during 3 full-time years. Your massive paycheck fails to determine your ultimate success. The actual evaluation checks your ability to sit in a room with those 6 traders. They divide $1.2 billion. You feel like the least intelligent person at the table. The firm breaks new hires with intense psychological pressure. This happens before the physical offer letter loses its warmth. Most employees fail to discover the specific trait management evaluates. Management evaluates one specific hidden trait. Management evaluates one specific hidden trait. That hidden trait defines your experience as a 21-year-old quantitative trading intern. You flew into Newark 4 days ago carrying 2 suitcases and a mental list of probability puzzles you solved 6 separate ways. Your monthly intern salary hits $25,000. The firm pays for your corporate apartment in Lower Manhattan. A massive signing bonus sits in your bank account. You ignored the tax implications because the digits after the comma made the money feel imaginary. A colleague hands you a deck of playing cards on your first morning. They give you 90 seconds to price a bet. You calculate the odds and miss the spread by 4 cents. A senior trader watches you write the final number on a whiteboard. The trader gives a single nod and walks away. You spend the next 3 weeks wondering if that nod meant you passed or failed. The trading floor features an open layout. Every seat holds 4 monitors. The building contains 0 private offices or closed rooms. Bloomberg terminals vibrate at a low frequency you feel in your sternum. The 250 Vesey Street cafeteria occupies a few floors above the trading desk. The kitchen serves free meals during every hour the building remains open. You eat all your meals inside the building. You leave the building to sleep. You blur eating and sleeping into a single routine after a few weeks. Your daily tasks focus on financial markets like ETF arbitrage and options market making. These 2 trading strategies produce more revenue per employee than almost any other global business model. Jane Street keeps this financial success quiet. The company employs 0 marketing staff. The partners refuse all media interviews. You realize the firm builds its actual product out of absolute secrecy. Your manager hands you a full-time offer letter at the end of the summer. You sign the document before checking the compensation section. You expect a massive number. The firm keeps the exact performance metrics for your second offer hidden from you. You enter level 2 as a new grad trader, stepping onto the floor at 22 years old, having graduated from university exactly 3 weeks ago. Your base salary lands around $300,000, with a substantial sign-on bonus adding to the total. The firm calculates your year-end bonus in December. That final payout pushes your total first-year earnings into the range between $450,000 and $600,000. Your specific number depends on desk profitability and the firm's assessment of your potential. The next 6 months involve training directly on the desk rather than sitting in classroom lectures. You claim a seat beside a senior trader and watch the trading screens. The firm forbids you from touching the actual trading book. You document every choice the senior trader executes and try to forecast the next move before it happens. You must write down the specific reasons for every incorrect prediction. You must write down the specific reasons for every correct prediction. You stack these notebooks on your workspace. You remain the only person who reads your analysis. The team runs this training environment with quiet but brutal intensity. Traders never raise their voices in anger. Managers never humiliate juniors in front of the group. You encounter problems as a slow accumulation of small errors. A senior colleague might notice you miscalculated second-order Greeks on a trade discussed during lunch. 3 weeks go by. That colleague disappears from the trading desk entirely. You discover by accident that the firm reassigned them to a less profitable book with stricter oversight. You realize the firm already tested and verified your mathematical ability during the interview process. Management now evaluates your ability to maintain conviction amid uncertainty while avoiding emotional attachment to the outcome. You must state a 54% probability and accept the 46% chance of failure without any emotional hesitation. Most new hires fail this test. They either flinch before placing the wager or become emotionally attached to the position. The firm treats both mistakes as indistinguishable failures in the profit and loss statement after 8 months. You take control of a small trading book by month 9. Your manager monitors the positions from a screen 2 seats away and maintains complete silence regarding your performance. The manager uses that silence as the evaluation itself. You end your new grad status the moment you commit an error significant enough to prompt a verbal comment. You begin a new professional tier. You then face the price of that new role. You hit level 3 as a senior trader at age 26. External websites list your old title. Colleagues inside the building treat you like a new person during meetings. You run an options book covering 18 tickers in the ETF and index complex, tracking everything from broad market indices to niche sector funds and commodity baskets. The firm wires your annual compensation of $2.1 million to your bank account on a Wednesday in mid-December, while the rest of the floor empties for the holidays. Management skips the congratulatory email. You figure out the unspoken operating rule of the company. Management pays you for asymmetric judgment. The firm treats the actual trade as the final output. Management views your personal judgment as the core unit of production. Executives compensate you for the trade itself when you make $10 million on a standard delta-neutral position any decent trader would take. You earn a larger payout when you dodge a $15 million drawdown on a risky position a careless trader would have touched. The firm leaves no record of the disaster you prevented. Public company documents outline a compensation model tying every employee to collective profits rather than individual P&L. The compensation committee rewards cautious decision-making over reckless gambling. You earn a seat in the small rooms. 4 or 5 people occupy these physical spaces along with a single whiteboard and a table covered in cold coffee cups. Leadership decides the fate of every trading strategy inside these 4 walls. Senior staff ask your opinion on a new European ETF options strategy tracking stocks 50 derivatives. You advise them on allocating $80 million in risk capital versus starting with a conservative $20 million. The company operates without named committees or formal investment processes fitting on a single sheet of paper. Employees run the entire business through these small room meetings. You figure out how to track the attendance list. You spot a clear omission. A specific person from the systematic research team building automated execution algorithms 3 floors down misses every single invitation to these strategy sessions. You lack the context to understand the significance of this missing colleague. You will understand the reason in 8 years. The daily grind tests your mental endurance in ways your friends working standard corporate jobs fail to grasp. You stare at the bedroom ceiling until the sun comes up after taking a $9 million mark-to-market loss on a single position. You skip celebrating a $12 million profit on a different trade. Your brain registers both outcomes as identical data points. You channel all your emotional asymmetry into the personal milestones you stopped tracking during your first year at the desk. You reach level 4 as a trader researcher at age 29. Your tenure hits 7 years when you include your initial summer internship. Your internal title shifts one more time. You keep this change off your public LinkedIn profile because employees here ignore standard professional networking sites. Management tasks you with running a large trading book, managing billions in gross exposure, and pitching fresh capital deployment strategies. Your total annual compensation jumps to $4.8 million. The firm keeps the cash away from your checking account. You take home half the money as deferred company equity vesting over the next 4 years. Leaving the firm before the vesting date means forfeiting those unvested shares. You feel this deferred payout acting as a financial tether. Executives refer to this setup as structural alignment. Rivals working at competing multi-manager hedge funds label it a golden handcuff. Both groups understand the description. You split your schedule in half. You spend 3 days on the active trading desk. You spend 2 days in a cramped office shared with 2 fellow trader researchers. You read dense academic papers on stochastic calculus and draft internal strategy memos for a private distribution list of 40 senior employees and portfolio managers. You pitch a complex trade targeting the volatility surface of single-name technology options like Apple and Nvidia earnings plays. The firm has zero historical footprint in this specific market. The unnamed approval group spends 9 full days reviewing the idea before giving you a starting capital allocation of $140 million. You see a 19% return on the deployed capital in month 4. Your strategy crushes the initial target. You take a $6 million loss over 5 trading sessions in month 5. The historical dispersion factor linking index volatility to individual stock volatility broke down under the new market regime. Management keeps the money in the account. Senior staff offers zero verbal feedback. You walk into the small room and walk the senior team through the mechanical breakdown of the correlation matrix. You promise a patched version of the model. The approval group increases your capital allocation to $210 million the next month. You lack an official partnership seat. Partners hide the profit share statement from your view. You know these documents exist because you track the massive cash distributions leaving the company every December. You also memorize the number of partner names listed on the public UK LLP corporate filings. Basic division on a bar napkin gives you the average partner payout for the fiscal year. You think the final calculated number sounds fictional until you force yourself to speak the exact digits aloud to an empty room. You reach level 5 as a senior researcher at age 33. You stop active trading. You direct a 7-person research group designing and pressure testing strategies before the firm hands those models to the trading desks. You earn well into 7 figures, reaching several $1 million in total compensation during strong years. Management defers about half of that total payout. The company lacks external clients and outside investors. You spend zero time managing client relationships or handling investor relations. The only stakeholders remain the internal members and the employees working for them. You start to see the full corporate architecture from a high vantage point invisible on the lower floors. The founders structured the business as a legal partnership. Partners supply the trading capital from personal funds and retained earnings. Those same partners absorb all financial risks and capture all financial rewards. The rest of the staff in the building work as highly compensated employees, holding theoretical paths to partnership. No colleague can outline the specific requirements for promotion. Management keeps the promotion rules undocumented in any written manual. You ask 2 members about the promotion criteria during a meeting in a small room. The 2 members exchange glances for 2 seconds before speaking, then one member explains the specific requirement. The current partners must feel comfortable keeping you in the room while they debate deploying $2 billion into a new asset class. That comfort level forms the full test. Everything else you did served as preparation. You head home that night and skip sleep to run mental calculations. You weigh the value of working harder for the next 4 years of your life to see if that extreme effort secures a genuine seat in the partner room or an illusion of one. Your spouse stopped asking about your arrival time. Your daughter began a new school year that you noticed through a calendar invite. Your current focus has shifted away from financial markets to evaluate your real chances of joining the partnership. You reach age 39 and evaluate those partnership chances on a Tuesday in November. A courier delivers a plain paper envelope containing a physical document to your desk. You break the seal inside the compact room you share with a single colleague. You scan the text. You review the text a second time. You slide the paper into a wooden desk drawer and walk to a previously scheduled meeting. The text confirms your new status as a member of the Jane Street UK Partnership LLP. The firm recognizes profit allocations for about 6 individuals in the published accounts for this year. The partnership economics extend into the United States holding entity. The complete official member list includes additional names across the global network. Your profit share reaches about $20 million before taxation. The firm deducts deferrals and mandatory capital contributions from that total. The working capital model demands that partners reinvest a significant portion of their earnings back into the active trading operations to maintain adequate liquidity. The partners distribute equity to favor top stakeholders. A single corporate entity holding the largest equity stake collects more than $1 billion in profit allocations during this year. The executives run financial calculations that dwarf the calculations near the entrance. Management skips any formal promotion announcement. The public relations team issues no press releases. The internal communications team sends no emails. You stroll through the trading floor on Wednesday morning. Informed colleagues acknowledge your new rank on site. Uninformed staff deduce your promotion through subtle clues over the following weeks. You attend an inaugural member meeting covering a potential expansion of the options market, making operations into a foreign jurisdiction. The team must commit $1.1 billion in starting capital for the proposal. The staff must complete a regulatory infrastructure project spanning 14 months. You contribute to the discussion 2 times. You pose an inquiry during the 2 interventions and withhold personal opinions. The veteran member sitting to your left possesses 19 years of experience and formulates better inquiries. You abandon the practice of sharing personal viewpoints in these gatherings for the following 18 months. You restrict your contributions to targeted questions and study the responses. Your new role involves exposure to the organizational risk and reward profile. A poor market year forces the firm to deduct significant financial losses from your personal capital account. 3 colleagues sitting in the current meeting absorbed multi-million-dollar capital account reductions during previous years. These veterans discuss those financial losses with the casual tone people reserve for standard flu vaccinations. The firm hides no data from its staff. Outsiders do not hear these details. You quit explaining your daily occupation to acquaintances. You stay silent because conveying the context exceeds your ability. A formal confidentiality agreement dictates nothing here. Your father brings up your annual compensation during the Thanksgiving holiday. You describe the payout as acceptable. He nods and pivots the conversation to a new topic. He lacks the context to recognize an accurate figure. You lack a standard number that satisfies his curiosity. A specific employee working 3 floors below your current office possesses the precise knowledge to evaluate that payout. That employee sits outside your current executive boardroom. You step off the elevator 3 floors below the trading desk. You enter an unphotographed corridor. 11 systematic researchers work in a quiet office down this hallway. These people build the proprietary models. They write code to price options and surface arbitrage opportunities. The team uses algorithms to predict ETF basket divergences and anchor the daily trading operations next to the human traders. The partners exclude all 11 researchers from the equity pool. The most senior researcher is a woman in her early 40s. She holds a doctorate in applied mathematics and joined the company 18 years ago. The partners pay her several $1 million in total annual compensation. She takes home millions of dollars. A senior partner takes home a larger fraction of the profits during that same year. The top corporate entity claims over 99% of the total pool. The senior researcher calculated these percentages during her 7th year at the desk. She understands the pay gap. She chooses to stay. The partners rely on her output to keep the business alive. The legal team omits her name from regulatory filings. She refactored her core algorithms 11 times. She stress-tested the logic against 34 years of historical market data. The production servers process her instructions thousands of times every second on a random Tuesday afternoon. A partner sits in a London boardroom debating the paint color for a new conference room while her servers execute trades. The corporate ladder you climbed for 18 years forms the public structure. Management hides a parallel structure from the new hire orientation packets. Management built this hidden track with a separate ladder. The track ends at a lower ceiling. The HR department issues different compensation packages on this secondary path. The human trader receives the massive partnership distribution. The researcher builds the specific model the trader uses to generate that profit. She feels no bitterness about this arrangement. She calculates fair compensation for her daily output in her personal financial accounting. She also recognizes her foundational impact on the business. She wrote a specific block of code in 2014. That 2014 script operates unchanged in the live production environment today. The code supports the current operation. Outsiders separate the daily labor from the official job title. The executives separate the physical desk from the executive boardroom. The senior researcher spends her days immersed in the labor. The partners keep her out of the boardroom. The executives use this physical separation to build the corporate architecture. The senior partners placed 6 chairs in the boardroom. The firm employs 3,000 workers. The company pays every single worker. The leadership team restricts boardroom access to a tiny minority. Jane Street built a structure where math talent designs the systems and traders execute the strategies. Each rung demands specific technical ability, and the firm cuts people who cannot keep pace. Outside Jane Street, a rival firm operates where mathematicians built the trading engine and traders pocketed the payouts. You can trace a career through every quant researcher level at that shop too.